Hey everyone, David Coe, the Co Real Estate Group. Hey, I read a really good article in the LA Times talking about the California real estate market and how inventory is starting to grow. So I figured it'd be a good time to stop and take a look and see where we are as of the end of April. So first thing on this article, which the link is below, there's all kinds of great information here. One that I thought was really interesting was looking at mortgage rates and the impact they've had on payments of homes. So in this graph, there's looking at a $1 million home. If you were to put 20% down, your average payment you can see in 2021, 2022 was right around $4,500. That same house now is closer to $6,400. So, nearly a $2,000 increase in monthly payment because of interest rates. Interest rates have actually been looking at the year a little bit more stable. Going into January, we were still really high, above 7%. But as rates dropped in February and in March down into the mid sixes, we actually started having a lot of activity in the market, which I'll show you here in a sec. But as soon as the impact of the tariffs conversation started kind of happening, you can see that interest rates started climbing back up. We almost got back up to that 7% mark, but it looks like we've kind of plateaued here, and are probably still kind of bouncing around in the high sevens. So when I look at where we are, the first chart we're going to look at is active listings. Our active listings are at 15,000 units in Los Angeles County and 5,200 in Orange County. So the blue line here represents everything in LA County. The red line is everything in Orange County. You can see that inventory is the number of active homes is about as high as it's been since all the way back in October of 2020, when inventory was really starting to build. The impact of that is really coming from new listings. When we look at where we were in December, in January, there were, 7,000 new listings in LA County, 6,200 in February, 7,100 in March, and 6,900 in April. So we've had a fair amount of new inventory hit the market. But when we look at months supply, you can see that it is really building. We're up to almost over 4 months of supply in LA County, 3 months of supply in Orange County. And when you look back historically, this is as high as our inventory has been in the last 5 years. Now, when we look out from a maximum level, you can see that it's nowhere near where we were, back in 2008 and 2009, even in 2011, kind of recovering from the Great Recession. But it's as high as it's been since, almost, before the pandemic in 2019. Something that's been really, really alarming is what's happening with pending sales. So usually over the course of the year, pending sales will drop in December and then pick up in the springtime, right? This is our spring selling season, and it drops off and then it rises and drops off and rises. Well, here you see in the springtime of this year, pending sales were on our climb in March, and then tariff talk happened, recession talk happened, and it literally dropped off a cliff in April. In fact, April of 2025, our amount of pending homes, which means homes that went into escrow, are lower than where they were in December of 2023 at the end of the year. And the impact on that on closed sales has been pretty dramatic, in the sense of what you're going to see here is in April, we were actually closing a lot of units. We were very busy in March and April, but what's going to happen is in May, when those stats come out, there's going to be a severe drop in the number of closed homes that we have in May. And then lastly, we'll look at the price. Prices are starting to flatten out. Orange County, back in March, we hit up to 1.2 million. LA County was 920,000. It stayed relatively flat in Orange County, but you can see it's starting to dip in Los Angeles County. And, if the trend continues where people are scared because of the recession talk, because of what potentially the impact tariffs could cause on the economy, and rates don't have some kind of adjustment to help increase buyer demand, we could see decrease in year-over-year pricing in 2025 versus 2024, which will be the first time that's happened in a couple of years. So hopefully this little snapshot was helpful. Of course, every little market has its nuance. You know, we do know of some houses in Redondo Beach that are still selling with multiple offers on them. Generally, they're, you know, very, very rare homes or rare lots, and they're priced right. But if you're curious about how this should impact you as either a buyer or a seller, we'd love to sit down and talk more about it. Please feel free to contact myself or someone from the team. David Coe, the Coe Real Estate Group. I hope you're doing well and hope to talk to you soon.